Hey folks, Dan Frio here with your real estate update for January 15th, 2024. Happy Martin Luther King Day out there, everybody. It is negative 30 degrees here in Chicago. That's why I got my hat on, my sweatshirt on, and I'm doing this a little bit late because it's been a brutal day. So without further ado, I want to get over to my reporting for the day because you guys are wanting to know what's going on with real estate. I do have to make one clarification. These numbers right here, I have to clarify this. So there was a young man on my comment section that says, Dan, the information you're giving about these rates is a little inaccurate. So what is the inaccuracies on this? Well, Mortgage News Daily, these rates that used to be published were for somebody, it was a first-time home buyer buying a primary home. It was going to be a single-family home. And normally what it was is if you were putting down 20% and had a 740 credit score. That was the criteria. They changed it, okay? So shame on me, but thank you for the viewers out there for finding this for me. What is this now? Well, the consensus is now this is a top tier scenario. It's used baseline as this. Now it's a 75% loan to value, meaning people need to put 25% down, and they have a 780 credit score. We use proprietary methods to adjust the rate to account for points. That can mean that the lender who quotes 6.12 with points, while others are 6.25 hypothetically. So just what you need to know is these rates are now this. If you're a first-time home buyer buying a primary home and it's a single-family home and you're putting down 25% now and you have a 780 credit score, well, that's going to be your rates. So if that's not you, it's probably not most of you out there, what do you need to do? Well, I'm going to give you my information at the end of this video so you can reach out to me. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico, and I'd love to help you guys if you're in the market right now to purchase your first house. So without further ado, let's get over to today's data so you can figure out what is going on with real estate. So today's market right now, we really don't have any economic news because of Martin Luther King Day. The markets are closed. Tuesday, we really have no data. The only data coming out this week that's really has any substance is Wednesday. We have core retail sales and retail sales. And then on Thursday, we have initial jobless claims. So my feeling is these numbers aren't going to really come in one way or another skewed. So the markets are basically going to be steady, just slow and steady, which we love right now. So we're going to talk about is what I want to discuss with you guys is I'm still working on my forecast for 2024. But I want to give you guys my thoughts behind the scenes. What do I look at when I'm trying to analyze this? Because last year, if you look at my data, I was pretty darn close. Where I was off, I was close on what was going on with house values. Where I was off was interest rates. And I think I was a little premature at these numbers. But let's get over to it. So we want to focus in on where interest rates are going to be and how much inventory we're going to have in the markets, because those are the two areas that are really going to create the housing prices that we're going to see. Are they going to go down? Are they going to be steady? Are they going to continue to rally up like they've been doing year over year over year? So the first thing I want to look at is interest rates. Okay, so what we focus in on now is the CME. What in the heck is the Federal Reserve going to do? So we go to this website, it's cmegroup.com. And it says this. What is this tool? Well, this tool is basically this. What's the likelihood that the Federal Reserve will change the federal funds target rate at the next meetings or the next couple meetings? Okay, so with this, we go down through here. Okay, what I want you to understand on this chart is in 2023, this is the year right through here, and this is where the federal funds rate is. This is the rate that the Federal Reserve controls, okay? We ended the year at 5.25 to 5.5, right through here. That was a consensus vote. Everybody says we're comfortable with that because it was the last meeting of 2023. So now in 2024, where does the Federal Reserve, where do the members expect rates to be? They're all over the board, okay? Each member of the Federal Reserve basically puts a dot on this sheet of where they think the federal funds rate is going to be. And they do this 4 times a year. Look, you have people saying that there's not going to be any rate cuts. That's right through here. Then you have others coming in saying it's going to be dramatically cut all the way down to 3.5 to 3.75. A big move. So what is it going to be? Well, all of them are showing at least it's going to start to come down. So the consensus right now, they're saying the federal funds rate should be about 4.5 to 4.75. Okay, so that's 2024. Where it's going to go from that, we know they're basically going to come down because inflation's coming down, but how far a rate's going to come, don't really know. And that's what I'm working on right now. The next piece of this chart we want to look at is normally what happens over history. What you usually do is take the 10-year Treasury, and let me find that on my map right here. This is the charts that I watch all day long, guys. So if you were in my office, you'd see one screen has this all day long. What I watch is the MBS market and also what the 10-year Treasury is going to do. Why the 10-year Treasury? Why is it even on this list? Well, historically, here's what happened. You would be able to follow the 10-year Treasury and say, okay, here, what's the yield on the 10-year Treasury? Right now it's 3.95. Let's say it's 4%. Okay. Historically, what you would do is you would add 1.5% to that, and that would be the mortgage rates, where the mortgage rates would be. So if you look at that, that says 4 mortgage rates, should be about 5.5. Where are they? Well, they're all the way up here, over 6.5. So there's a disconnect right now in the markets of this. Okay, so that's what I really want you guys to understand. No longer can you focus on the 10-year Treasury because there's a discorrelation with this, but there shouldn't be. Okay, so based on that, let's look at where historically the 10-year Treasury is. So this is a map over the last 10 years. Okay, you can see it's all over the map. Right down in 2021 or between 2020 and 2021, that's when we had the pandemic. The Federal Reserve came in and basically brought rates down to zero. But historically, what is the number? So you go through here, and on the side, you say a long-term average is right up through here. You can see it above my head, 4.25. So again, we take the 10-year Treasury at 4.25. We add 1.5% to that. So that gets you at 5.75. Okay, that's potentially where mortgage rates are going to be. Okay, so let's take that. That's what I'm focusing on right now. The reason why I'm looking at that is because of now, how many houses are going to be on the market? Well, right through here, what would an existing homeowner like myself need on an interest rate to put my house back on the market? Like, for example, I have 2.625. Am I going to sell my house and buy a new house when the rates are 8? That's a huge deterrent. But at what rate would a lot of homeowners put their house back on the market? It's saying 5.5. So we're looking at 2024 as a time when rates might get down to about 5.5, and that might flood the market with more and more homes. Okay, so why we focus in on this is the more of something we have, if you have way too much of something, it drives down the prices. So are we going to get a flood of homes in the market? Well, the foreclosures scenario isn't fitting the agenda. When you look at new home buildings or permits, you have right here, building permits, look where we are. Historically, if we look at that over historic numbers, we should be about up to here, 1.8. If you just took the trends, we're not. We're way down here. We have construction spending that we haven't had since 2019. Okay, so there's a big disconnect here. We have a housing shortage. A lot of people are saying no. These are the permits, folks. So these are the houses coming to market soon. These are under construction, basically. Look at it that way. So if we don't have a ton of homes coming to market because of this, we don't have a ton of houses coming to market because of foreclosures, and we don't have a ton of homes coming to market because rates might get this low, but they might not. You're still going to see what? So I want you guys to figure that part out of it. Where do you see interest rates being based on a lot of these trends that we're seeing from the Federal Reserve, the 10-year Treasury, and so forth? And then do your research, especially specifically for your area. What is your area doing? So we have a website that we use for that data. What I'll go to do is, it's called Altos. I'll put the link down below. So you guys, what you can do is just go into that website, plug in your address or your zip code. It's going to tell you how healthy your market is. Okay, so that's my report basically for today because we have really no economic data coming out. So without further ado, if you're out there and you're like going back to here, remember I said, are you putting down 25%? Do you have a 780 credit score? If that's not you, what kind of rate could you qualify for? Or can you even qualify in this market? House prices the way they are, mortgage rates the way they are. Well, all I ask you to do is please don't disqualify yourself, okay? Go to the Rate Update. That's our website, therateupdate.com. You're going to find a slew of information up here that can help you kind of dissect your markets, understand the mortgage process and everything else. But if you're out there and you're like, I need some help. I just want to talk to somebody to see, do I qualify in today's market? Got 3 ways for you to reach out to us. 1, hit the Apply Now button. You're going to see something unique there. You're not going to be putting in an application. You're actually going to answer some questions and then set up an appointment to talk with one of my mortgage advisors. What other company is doing that? Because we want to make sure you qualify and we get all your questions answered. Or what you can do is you can actually call us or email me directly. Down through here, you're going to find our 800 number as well as my email address, and it is right here. You can give us a call at 844-775-5626, or you can reach me directly at dan@therateupdate.com. So please let me know after you review all this data, what's your expectations? Put it down below in the description. What do you think mortgage rates are going to do this year? Give me a specific. Do you think they'll be at 5.5 like some people predicted, 5.75? And do you think that the housing market is going to crash? Do you think it's going to be stagnant, kind of like we saw in 2023? Or do you think there's going to be an uptick like some of the areas we saw, like Hartford, Connecticut, and Detroit? They had double-digit returns in 2023. So what's your expectations? Please post it down below and share with us. Thanks so much for watching, guys. God bless. Have a fantastic day. Hope to see you soon. Bye-bye.